What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 2nd of 2018. Well, folks, today we have a wide range of topics to discuss here on the Daily Update. First and foremost, as always, we're going to be spending a good amount of time taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we've got a range of topics in crypto, traditional, and commodities markets. Specifically in crypto, we're going to be talking about how a wallet that John McAfee had promoted for months on end ended up actually being hackable when he claimed that it couldn't be hacked. We're going to be talking about some developments in the SEC in regards to regulation on crypto and developments on the ETF, and also when we might be expecting the next altcoin cycle, looking at some key data points and price action. And outside of this as well, we're going to be taking a look at how in traditional markets, the Bank of England has raised interest rates yet again to 0.75%, and a variety of other key data points that are signaling we might be at the turning point for equities markets. So that being said, lots of things to talk about. Let's go ahead and dive into it. That was definitely a mouthful. And also, I'm testing out a new mic. Let me know what you guys think. My friend is letting me borrow his mic at the moment, so let me know if it sounds better than the Yeti, or if there's any modifications I should add to it. All right, so going into the first topic here, let's go ahead and take a look here at crypto markets. For the moment, most players are in the red again. Alt season has not hit yet, and we are still feeling the pain as Bitcoin remains stagnant along its line of support at the moment. It has so far held support on the previous line of resistance. This has been, again, a good sign in regards to TA, and it takes a few days to build this kind of development of price support. We're going to have to see if it can continue to hold as we take a look at it later. But if we go ahead and take a look at market valuations, we've obviously been seeing that not only with Bitcoin taking a slight correction over the past few days, but with altcoins following quite dramatically behind it, we're seeing valuations drop. Now, we're still above $250 billion. And again, I think it'd be really healthy if we end up coming down here with altcoin dominance continuing to drop and Bitcoin remaining relatively steady where it is at the moment. If we were to come back down and retest this level at $250 billion, again, coming down and having a triple bottom in a sense for this valuation, I think it'd be very healthy and could confirm that markets in the longer term trend, could be building a stable bottom and looking for higher levels as we go into a potential bull run going into the later part of August and into September and October into the rest of the fall and winter. So going down here, let's go ahead and take a look at market dominance. Market dominance still back on track. Bitcoin making relative highs and market dominance towards 48.4% last time I checked, or 48.5%. So again, we're about 1.5% away from reaching our target of 50% here. Again, guys, this is relatively reasonable to expect. Altcoins right now are kind of going through their last flush at the moment, and I think that as Bitcoin continues to correct along this line of what was previous resistance and is now support, it's quite understandable that we could reach 50%. This has been our target for the past few weeks and is a big even on market dominance. So let's go ahead and see what happens here. I'm still betting on 50% market dominance for Bitcoin. And speaking of Bitcoin, as we take a look down here on the hourly, we can see that it is holding quite well on this line of previous resistance. Again, this is the key indicator we've been talking about, guys. Every single time we dip slightly below, there is buyers coming in and holding it up. Pretty thin volume for the moment, nothing too crazy, but it's actually good to see that we're not seeing any sell side action, any serious sell side volume breaking below this 100-day. So long as Bitcoin holds here, this is looking quite nice to me. It seems like it's trailing on the 100-day at the moment. Again, this has been what I've been watching. And then also as the 21-day comes up, which I don't have on the chart here at the moment, as the 21-day comes up, it might provide as a system of support for momentum. Basically, to put that in simple terms, if price holds on the 21-day and we can get a nice curve in price action off this line acting as support, with both the 100-day and the 21-day, we can continue to see this go higher. And I think our next target would be $9,000 in that case, testing towards the next Fibonacci level. But, with Bitcoin coming down, the RSI has cooled down. Price has had a nice steady correction from a run up from 5,800 towards 8,500. And again, we're getting a little bit more patient, realizing that we're not going to get ETF news overnight or any kind of major development for quite some time. But again, the hype builds up over time. It's going to be priced into markets days or weeks before it actually gets announced or rejected. So Going on here to take a look at some of the market leaders, let's go ahead and take a look at Ethereum. Ethereum continuing to decline. Again, I'm placing my bets that it's not going to hold here, everyone. And my personal opinion, I don't think we're going to hold around 5,500,000 Satoshis as we saw over here. I think we're going through the longer term trend here. I think altcoins, again, still have a little bit of a ways to go here. And we can see Ethereum come down to 4 million Satoshis and be very, very healthy for this market. And again, I'll talk a little bit later as to why that's important when we take a look at questioning whether or not we're setting up for the next altcoin cycle. Going on to take a look at Ripple. Again, Ripple, I mean, nothing too new here. Sorry, I'm on the index tab here. Again, right now, closing down on some of its gains from yesterday. I'm more concerned about the longer term trend here, not making any trades. Same goes with Bitcoin Cash. Bitcoin Cash at the moment still not down towards my 9 million Satoshi target. Because of that, I'm not trading it. Going down towards EOS. Again, EOS continuing the decline with most altcoins. It's got a little bit of a ways to go. Still think we could come down towards around the key support level, around 55,000 Satoshis, where we saw back here and back here. So again, I'm being very patient with altcoins at the moment. It's a general trend that I'm still sticking to at the moment. You know, Litecoin got a bounce off 1 million Satoshis the other day, pretty expected. Nothing too large though, nothing serious in regards to making a serious trade here. And I want to see it test this range down around 800,000 Satoshis with altcoins continuing to flush. Basically, what you're going to get is you're going to get Bitcoin probably lifting off this line that is now acting as support, as we were just talking about a few moments ago, and altcoins aren't going to keep up. Their USD valuations are going to possibly stay stagnant or maybe move up a little bit. But again, we're measuring a comparative to Bitcoin here. So we're going to see these altcoins continue to probably roll down and not be able to keep up with a 10 or 20% jump in Bitcoin. So that's my main kind of trend here. I think, again, we're still not in alt season just yet. We could get it in late August, but I don't think we're seeing it just yet. Going on to take a look at a few. I'm going to be generous today and cover, even though we're going through a crazy amount of data points and we've got a lot of things to talk about. Cardano is still holding relatively nice towards its lows over here. The one thing I'm concerned about is if we're not able to hold this, if the RSI can stay oversold for quite some time, we might actually finally get Cardano coming down towards this previous level of resistance down here before we had the parabolic run up. And if we were to get a continued flush in the altcoins we talked about, I think that's very, very plausible for Cardano. In that case, I'd feel very, very interested at watching those levels personally. But again, you got to do your own due diligence and see if you see what I see on that. Going on to NEO here, I again had stated I wouldn't feel comfortable adding NEO until it went below 400,000 Satoshis. Lo and behold, it has gotten below that level over the past few days, but I'm actually going to wait. In this case, if we really do get alts continuing to flush in this market, I think we could see NEO getting closer towards 200,000 Satoshis. This has been a support level. If we take a look at Bittrex here, a few previous times back here and over here, I think we could very well see it on NEO. Again, we're seeing a lot of these protocols flesh out, guys. Right now, the market is not favoring altcoins. And again, this is where we want to start getting a little bit more greedy. We want to be more comfortable with altcoins than where we were back in, December and January. When we were in December and January, we were saying to be worried about altcoins, and now we're getting in a range where, again, this has remained in the oversold area for quite some time, and it's getting a little bit more comfortable, but we're not seeing the momentum just yet. And until we see that, until we see a trend reversal, we're not going to make any serious moves here. Going on, the other player that I was talking a lot about last night was NANO. NANO has reached into a pretty oversold set of territory. The thing about NANO is that we don't have much price action to work with here outside of the downtrend we've had since January and December. But this is one that I'm watching. It's been generally oversold over here right now. It's close to its around 20 on the RSI, and I'm expecting a decent bounce off this in the next few days. Now, I have added on to NANO as we've gone down here during this downtrend. Again, I'm playing this for the longer term swing, guys, but it's one of the few altcoins that I've actually been adding at these levels. Most of the protocols I've been relatively shy of, outside of my short-term trades like QuarkChain, and I've been looking at Komodo and also NEM as well. And speaking of those trades, we'll go ahead and take a look at those as the last few here. NEM getting very close towards our level. Again, I'm expecting that we'll get a flash sale through 2,000 Satoshis, and when we get that sale, I'm going to be definitely looking to see if I can pick up some NEM at those levels as it dips below that level. And then going on as well to Komodo. Let's take a look at our last player here. Komodo has rolled over and is actually going lower than where we saw on the lows over here. So we might have a little bit of a ways to go as we saw back here. Again, we have some periods where we break below 2,000 Satoshis. The lows here during the last pullback were 17,000 Satoshis. So I think that's where we could generally see Komodo go to here in the short term. So not getting, I'm definitely feeling comfortable here. We're close to these levels that we've seen historically have been good areas for price to move, but I'm going to remain patient and really try to assess what players are best to play at these times and if the altcoin cycle is ready just yet. So we'll take a look at some data points later on as we go throughout the video towards the end to summarize all this stuff, this talk about altcoin cycles. An interesting article that we had on CoinDesk here was a recent transcript that got leaked out from the SEC about the SEC chairman discussing about how he had gotten, or excuse me, it was someone else citing that he had gotten into a heated debate about cryptocurrencies. This was kind of an off-the-record transcript, but here's the general quote from it that really kind of interested me, and it kind of shows, again, it speaks towards the levels of how the SEC right now, again, I think people have a very high level stigma over, and yes, I can disagree with what a lot of the SEC has how the SEC has approached a lot of cryptocurrencies. But again, we can see, even with simple things like Howie coins, they are trying to make sure that this industry is they're making sure as an organization that they protect retail investors in this new emerging currency market. It's quite understandable, but at the same time, trying to find that neutral balance between not cutting off opportunity and still allowing people, to potentially partake in purchasing Bitcoin through an ETF or being able to partake in ICOs. Again, it's a continuous fight. But going on here, this is a really nice quote. In fact, the first time that I met the chairman, I walked into a heated discussion he was having with an attorney in my office about the legitimacy and viability of cryptocurrencies. I was taken aback, honestly, about how much thought he had given to the space and the issues surrounding that. And what I have learned in the time working with him is that he has given every single issue that he has confronted that same dedication and thought process. So to let you all know, about people in the SEC, I'll keep it kind of short here to summarize. Most people in the SEC have worked in traditional markets. So Jay Clayton, for example, who is the SEC chairman, he's worked for a variety, if I remember correctly, I did some research on him. I think he had worked at a variety of different hedge funds in a variety of different spaces for well over almost 2 decades. So because of this, these people have worked in, a variety of different markets for a long period of time. And the thing about this that we have to be fair about is that as an organization, they do have years of experience in traditional markets and they're dealing with something completely new. So they need to get a grasp on the entire sector. They need to know who are the players in this space, how are markets moving, how can bad actors, benefit in this space, and how can we prevent if we're going to launch markets or give retail investors access to investing in ICOs or investing in a Bitcoin ETF. What protection measures can we have if we're going to open up these markets? So again, it's interesting to see the developments of the SEC. We're starting to get a little bit more honesty coming out of the SEC about their current position, as we'll talk about later on with one of the SEC chairmans. One of the individuals from the SEC who is in support of the recent Winklevoss Bitcoin ETF or any Bitcoin ETF down the road. Next up, I want to spend some time to talk about something that's been trending on Twitter and everyone's having a few laughs over. The BitFi wallet that John McAfee has been promoting endlessly over the past few weeks and has been saying is unhackable was recently hacked. There was a few individuals on Twitter who came out basically saying in short that they have root access through a patch firmware and they can confirm that the BitFi wallet is actually hackable. Now, this goes towards the point that pretty much anything can be hackable. There is no such thing as unhackable. But there is, a thin line that people talk about. There is, for example, there's coding languages out there, for example, like Haskell that Cardano uses that are, for example, less tamper-proof, they're more tamper-proof in a sense. They can't be, in a sense, construed with. Code is not very easy to break in that sense. But in something like this, when you're talking about hardware wallets, most people have a firm belief that most hardware wallets can be broken into. Okay, so again, after weeks of promotion and selling the point, and even putting a bounty campaign out for, I think it was $250,000, that if anyone were to find a way to break it, that they can earn the bounty. I'm pretty sure that not only have we found a way that the BitFi wallet can be broken, but I'm pretty sure that John McAfee and everyone associated with BitFi will not meet to these standards. But again, that's just where I personally feel is going to happen at the moment. But it's funny. Again, it goes to the point that pretty much anything can be hacked. Another interesting thing I found on Twitter at the moment is the ICO market. Now, as we start to go and talking about the altcoin market here in just a little bit, it is very interesting to see the recent decline in ICO raising. Now, we have definitely not gone away from raising money in ICOs. There's still more money this year alone, and we're only a little over halfway through the year. We've already raised more money through January and to July than what we raised in the previous year, almost 2 times over. So as we're seeing a decline in the ICO space, I can attest to this, guys. Again, a lot of people are realizing that a lot of ICOs are not delivering. They are nowhere close to meeting the expectations of what they promised, that they're not reaching into the real adoption, the real use case, the real demand for their tokens. I mean, this is quite expected. And we've been talking about this. I did this in my recent video on my 1-year anniversary. The amount of corruption in the ICO space, I think, is starting to wake up a lot of VCs and hedge funds. It's kind of ironic. A lot of the hedge funds and VCs are at the top of it, and they're realizing that this market is definitely looking much more bleak. So yeah, it's again, we can see here, there's different data points. You can go on CoinDesk as well, which says that June was the highest month for ICOs. This generally compiled a variety of ICOs, including, I think it was mostly had to do with EOS as well as Telegram finally closing, and they only put that into this category, whereas in previous data points, they probably factored that in on the other chart we looked at here. So people have different ways of measuring it, but the general ICO space right now is slowing down. We can see that the number of ICOs is dwindling compared to what we saw back in December. So going on here, let's go ahead and talk about this SEC commissioner, Hester Peirce, who has become the crypto mom, who keeps on going out talking about the positive nature of implementing a Bitcoin ETF and how the SEC should not get in the way. The headline reads, "No reason not to allow the Bitcoin ETF." This all stems from an interview that she recently did with the well-known crypto trader. Now, this has been an interview that I recommend people go watch for the moment being, kind of talking about some of the rationale. She explains very well about how the SEC at the moment is attacking this issue and really just kind of taking on something as big as implementing something like a Bitcoin ETF. It takes time to get these things pressed through. I can tell you I have a variety of people I've talked to who work in different rings of finance, and they basically say along the same lines that an ETF, there's a specific process of guaranteeing custody, getting approval from the Federal Reserve, getting approval from all these financial regulators in order to get this through. And there's reasons for it. A lot of it's bureaucracy sometimes, but again, when we're opening up a multi-billion-dollar cryptocurrency market to people's portfolios, we have to be concerned about that. But again, I've already spoken on some criticism before. I think, it's good to see people like Hester Peirce coming out, because if I can go trade, for example, when I was younger, I used to trade in a joint brokerage account where I would... I had a joint brokerage account with my father, actually, when I would trade stocks. And at the age of 17 to 18, I was already trading triple leveraged ETFs on pharmaceutical markets and oil. And, again, I'm pretty sure that we can have a Bitcoin ETF, to allow investors to get a little bit of stake in Bitcoin. I don't think any whale will be able to manipulate markets the amount of volatility of what I saw in those ETFs. So anyways, recommend you go watch this. Again, very neutral viewpoint. This is what the SEC should sound like in this sense. Really liking what I'm hearing from Hester. So going on here, I keep on getting this notification when I switch between my different trading view tabs. Anyways, I want to talk a little bit about the question that I've been getting asked a lot, and that is the question as to whether or not we are in altcoin season, if we're getting ready for altcoin season. And here's what I'll say. I'll say that we're in the 7th or 8th inning of this bear market. And here's why I say this, because we can take a look at 4 good momentum plays here, 4 good market leaders. Ethereum, Dogecoin, and I'll explain why, NEM, and then also Ripple. Now, I'm not saying these are great projects. I'm not saying that these are, my top tier favorite projects or top holdings. I'm using these because they're very good indicators of picking when market momentum is about to strike, when we usually find bottoms in markets. And I don't have to do any crazy TA to know this. I mean, I can simply look at the chart here and look at previous price action and previous market cycles and get a good idea of where things are going to start moving. So let's take a look down here on the list. We can see Ripple has had very similar price action ever since the start of 2017 in the previous 2 cycles. And we can see that we're well on our way down towards this lower range here. But we see that every time Ripple tends to step below this line around 2,500 sats, it's usually in the buy zone. So we're still extended a pretty decent ways away from that region. Now, are we going to see Ripple dip all the way down below where we saw before? Maybe not. But again, we're still an extended way on some of these major players from that region. Now we can see in players like NEM, for example, we're getting a little bit more comfortable here. We're getting a little more close towards this range where we might be able to start getting more optimistic on altcoins. Again, when we see price below this range, which tends to be, used to be a previous level of resistance, now acting as support, this is where we usually can get optimistic on NEM here. We take a look here at Dogecoin, which again is a momentum play when we usually get price below this line here. It's been a buy area, usually in the low double digits, usually below 20 sats. Right now, we're still at 40 sats for Dogecoin. Again, some of these plays are still well above where they were back in October, November, December, and towards the early parts of December in that case. And then if we take a look at, for example, Ethereum here, Ethereum is still riding in within the wedge here. I think, again, we could see Ethereum going down towards 4 million sats. So, again, why I say we're in the 7th or 8th inning and why we still have a little bit of time to go, people have to realize that we've only been in a bear market for, generally speaking, about 7 months now. January, towards the end of January is when we really started to turn over. So because of this, we have to be patient. We are getting very close to it, guys. I can definitely tell you we are on the ladder of this bull run, which is why I'm comfortable saying we're in the 7th or 8th inning. The 9th inning will be the final flush, and when we get that, it is going to be the time where we go shopping. It is the time where we get eager, that we get excited because not only of what I believe is going to happen, a Bitcoin ETF, but also the excitement that's going to reach into altcoin markets after some of that capital gets allocated into altcoin markets after Bitcoin goes towards higher levels. So again, that's the name of the game. That's the objective. We don't know if an ETF is going to get approved, but I can tell you guys, it's the reason why I believe, again, I said it last year, and I was talking about futures contracts, and now we're finally starting to see the same kind of talks with the Bitcoin ETF. It's still speculative. It's still a very contrarian view, but a lot of people didn't believe a Bitcoin futures contract was going to come out last year, and it did. So, I think we could not only see that, we could see Ethereum futures contracts. There's a lot of developments going on in the financial sector right now. It's something that, you want to get greedy and excited in these periods where price action is dull, it's stagnant, or declining in this sense. So, not telling you guys to buy anything. You got to do your own research. Let me know what you think down in the comments down below. But we're having a nice correction in this market, and we're definitely towards the latter of it, in my opinion. All right, going on here. Going to take a look at a few different things on zero hedge. Important announcement here. The Bank of England has raised interest rates in a surprise unanimous decision towards 0.75%. This is key to watch. As I tell you all, the major turning point of economies at the moment is going to be interest rates. The turning point for equities is when these rates get too high, and the Bank of England has had another 25 basis point increase from 0.5% to 0.75%. So, again, this comes out of the idea that regulators are seeing wages get out of the stagnation phase and actually start moving higher. We're starting to see standard inflation rates come back. These are the things that central banks want to see. But again, as we raise these rates, economies are tightening. It's quantitative tightening rather than quantitative easing. And this is not what you want to see when you're taking risk in trading equities. When equities are well overextended and you have rates getting higher, and when the market is living off of stock buybacks, which means that a lot of that capital is being borrowed through corporate debt to acquire those stocks, it's going to get more difficult to borrow money and thereby continue propping up equities. So, whether you're talking about the more core economy and lending practices to average, consumers on a day-to-day basis, whether it be home loans, auto loans, credit, just general credit for spending, or you're talking about equities markets, it's not a good sign to see rates going up because we tend to find that when rates go higher, markets turn over. And to talk another, really interesting piece that I saw today that was put up by Tyler Durden on Zero Hedge, one of Buffett's favorite indicators, one of the perma bulls on markets. One of his favorite indicators has been signaling that we are in an overextended period in equities markets. Now, again, I don't want to just cause panic here. We've seen that this Buffett indicator has been in the overvalued area, not only for the past few months or so, but along with that as well, that we've seen this level at previous highs in markets. So it's key to take a natural balanced approach to it, or a neutral balanced approach. But we'll go ahead and zoom in the chart here and I'll explain what it is. So basically, this is what's known as the Buffett indicator. It's the Wilshire 5000, which is a compiling of the entire stock market valuation at a ratio to a gross national product, or GDP in this case. So If we take a look at the chart here, we can take a look historically all the way back since 1970, and we can see that, we've had some peaks at a variety of different levels. We've had one around 80% back in the 70s. We had one around 136% during the dot-com era, and 104% for the rally into 2006, and then the collapse down towards 2008. So I really want to emphasize one key number here, and that's what we're seeing right here, the number for the dot-com era, and where we are right now with equity valuations. We're sitting at 140%, an all-time high on the Wilshire to GDP ratio. And this is above 2 standard deviations on the chart here. There's a reason I want to talk about the importance of this. Not only did we see a peak here in the dot-com era, but we are above dot-com era valuations comparative to actual gross domestic product. And don't even get me started, GDP can be heavily manipulated as statistics. We've seen that in China for quite some time. But I mean, no matter if you're using inflation variables and using different data points to manipulate GDP, putting that aside, we can see that equities are at their highest level comparative to GDP that we have seen at least in the past 50 years. Let's think about that for a second. Now, again, you guys know when it comes to these market cycles, the reason why I've only turned bearish this year in 2018 is we've started to see some drastic volatility return. We're starting to see these data points that you can't shake it off any longer. Equities markets are heavily overextended. So I'm not going to beat a dead horse in this sense. You guys know my position, but I would just say that, again, I'm a macro trader. I like to play the longer term cycles. And in this case, I can definitely tell you, whereas I was feeling comfortable back a few months ago in equities markets, it's been a nice run up, but it's getting to the point where it's a little bit overexhausted. Going on here to take a look at a few more different data points. Are rich investors about to get crushed? This is another chart on lmtr.com, which basically talks about how at the moment, larger scale investors, some of the institutional investors, are realizing the smallest amount of capital allocation out of their portfolio that we've seen since back at the peak of 2007. Basically, this means that more investors in the institutional space are holding less and less cash. The high amount here on the chart here that we saw the peak back in February 2009 was when obviously the recession had already hit, and when at that moment that meant that 21% of all holdings was in cash. But at the moment, we're seeing all the way down towards 10%. This means that larger investors are very heavily diversified in equities at the moment, much like they were at the peak here in 2006 and 2007. So as much as we talk about, the institutions and the insiders, I mean, this is a very wide audience that we talk about, knowing when the market's going to peak, knowing when, for example, the game's up, we're going to have a recession, and then they usually buy in cheap. Again, this is taking the broader amount of larger money. And a lot of large money doesn't actively trade in markets, doesn't really play the market cycles. It's, people who have it in longer term funds in this case. And because of that, we can even see that even the smart money, or what seems to be smart money, can get absolutely crushed and obviously have its peak cash position right at the bottom of the market. And the months of February and March 2009, where markets finally rebounded. So again, this is a very, very interesting indicator to watch. And along with that as well, the beta of this same indicator here is showing that we're at the same peak we were back here in 2015 during August. And this is when we experienced the flash crash in 2015, where we had a massive sell-off in equities, and probably the largest sell-off we've seen outside of comparative to what we saw back in February of this year. So again, volatility is returning. Definitely keep an eye on it, guys. My play here still at the moment is still focused on commodities here. Again, I'm a macro trader. I play these larger cycles. And take a look, guys, at this chart. You can obviously see what's cheap in this market right now. I honestly think crypto is still my favorite play of the year, but at the same time, we've got a decent amount of excitement that could be coming in to commodities markets over the next few months. We've been talking about gold and silver. I still think they got a little bit of a ways to decline as equity markets go through their final rally. But once we find some support levels on there, and we also look at a variety of other players, uranium, which I'm going to be doing a video on later down the road to talk about the longer term trend of uranium. We have commodities at very cheap levels here, whether they're more precious metals like platinum as well, or towards more general commodities. We're at a very cheap level comparative to equities. And I'm not saying that all of equities markets are going to go up 8 times, but comparative to equities, commodities are going to probably have one of these repetitive cycles, anywhere from 6 to 9, the 6 to 9 ratio from the bottom down here around a 1-to-1 ratio of equities. So I'd like to hear what you all think about this. Again, I like to return to some of these old data points, but we've talked about a lot of interesting new things as well. Love to hear what you all think about commodities markets, equities markets. What do you guys think about all the developments in crypto markets at the moment? Do you think that we're near the altcoin cycle, or that we've got a ways to go? Love to get a discussion going on in the comments and hear what you guys have to say. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.